What if the next big stock winners for 2025 are hiding in plain sight, just waiting to be discovered? Today, I'm revealing 5 companies that aren't just growing, they're transforming their industries and setting new standards. We'll cover a digital banking disruptor, a cult favorite coffee chain, an e-commerce and fintech powerhouse, an athletic apparel innovator, and a global tech giant. These aren't random picks, each has massive potential, and I'll break down why they could be game changers for your portfolio. Get ready to take notes, this could be your roadmap to serious gains and financial success. Hit like, share your thoughts in the comments, and subscribe so you never miss an update. Let's dive in and explore these opportunities. First up is Nu Holdings, ticker NU, a digital banking platform that's making waves in the financial world. Revolutionizing finance in Latin America, Nu Holdings is not just another fintech company, it's a movement. Nu's mission is simple: fight complexity and empower people. They aim to make banking accessible and straightforward for everyone. In a region where traditional banking is often inaccessible and cumbersome, Nu's no-fee credit card and user-friendly app have attracted over 100 million customers across Brazil, Mexico, and Colombia. This is a testament to their innovative approach and customer-centric model. That's more than the population of Germany, proof of how broken legacy banking was and how well Nu timed its entry. The company has tapped into a massive underserved market. What makes Nu a top pick for 2025? 3 things: explosive customer growth, expanding products, and surging profitability. Their growth trajectory is nothing short of phenomenal. They're adding millions of users every quarter, mostly through word of mouth, an unbeatable marketing advantage. This organic growth speaks volumes about customer satisfaction and trust. Nu isn't just about credit cards. They now offer loans, investments, insurance, and even crypto trading, all in one app. This diversification makes them a one-stop financial solution. This super app approach keeps customers loyal and increases revenue per user. By offering a comprehensive suite of financial services, they ensure that customers have little reason to look elsewhere. Their tech-driven model means ultra-low costs and high margins. As they scale, profits are accelerating. The efficiency of their operations is a key competitive advantage. Even Warren Buffett's Berkshire Hathaway is a major investor. He sees the long-term potential. When a legendary investor like Buffett backs a company, it's a strong vote of confidence. Latin America's young, tech-savvy, and largely unbanked population gives Nu a massive runway for growth, especially in markets like Mexico, where they're just getting started. The potential for expansion is enormous. Some say the stock is expensive, but for a company disrupting an entire region's financial system, that premium is justified. The long-term growth prospects make it a compelling investment. Nu is building the future of finance in Latin America, a beloved brand, rapid growth, expanding products, and a profitable model. They are setting new standards in the industry. Nu Holdings sits as a formidable challenger in fintech, carrying a market value of about $84.26 billion. Its per-share earnings run at roughly 52 cents, and the stock trades at a price-to-earnings multiple near 33.44. Last year, the company pulled in around $8.26 billion of revenue in 2024, and converted that into roughly $1.97 billion of net income. Figures that speak to a maturing digital bank model finding scale. For investors willing to hold, Nu Holdings could deliver outstanding returns as it continues to dominate and expand. The company's vision and execution make it a standout player. This is a leader you want on your radar for 2025 and beyond. Keep an eye on Nu Holdings as they continue to revolutionize the financial landscape. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next, let's talk about Dutch Bros, ticker BROS, a coffee chain with a cult following that has been making waves in the coffee industry for years. Known for its unique drive-through experience, Dutch Bros has redefined what it means to grab a quick coffee on the go. Unlike Starbucks, Dutch Bros isn't trying to be a sit-down cafe. They've carved out their own niche in the market. Instead, they focus on speed, quality, and a customer experience that turns every visit into a highlight. Their drive-through model is designed for efficiency, ensuring that customers get their coffee quickly without sacrificing quality. Their baristas are famous for their energy and friendliness, creating a fiercely loyal customer base. These employees are more than just baristas. They are brand ambassadors who make each visit memorable. The real story here is expansion. With around 900 stores in 17 states, Dutch Bros aims to reach at least 4,000 locations nationwide. A 4-fold increase. This ambitious growth plan is a testament to their confidence in the brand and its potential. Every new store is a new engine for growth, and their methodical, region-by-region expansion strategy is working. Each grand opening is a community event, drawing in crowds and creating buzz. Their menu goes beyond coffee. Specialty drinks and endless flavor combos attract a younger crowd and drive repeat business. From iced coffees to energy drinks, there's something for everyone. This innovation sets them apart, giving them pricing power and making Dutch Bros a destination, not just a coffee stop. Customers come for the drinks but stay for the experience. Financially, they're in hyper-growth mode. Revenue is climbing fast, fueled by new stores and strong same-store sales. Investors are taking notice, and the stock has been performing well. Management is focused and disciplined, building a sustainable growth story with a strong balance sheet. Their strategic planning and execution are key to their ongoing success. As Dutch Bros expands east, millions of new customers are discovering the brand. This geographic diversification reduces risk and opens up new revenue streams. Dutch Bros is a much smaller, higher multiple growth story with a market cap near $9.64 billion and earnings of about 49 cents per share. Its valuation is rich, a trailing PE of roughly 119.61, after generating approximately $1.28 billion in revenue in 2024 and reporting net income of roughly $35.25 million, highlighting a business still investing heavily in expansion. For 2025, it's simple. Watch the store count. As long as they keep opening successful locations, the stock should thrive. Each new store is a step towards their ambitious goal. Dutch Bros is a proven concept with a massive runway, powered by a brand people genuinely love. Their community-focused approach and innovative menu keep customers coming back. It's a classic growth story, one you don't want to miss. With their unique approach and strong brand loyalty, Dutch Bros is poised for continued success. Our third pick is MercadoLibre, ticker MELI, often called the Amazon, PayPal, and Shopify of Latin America, all rolled into one powerhouse. Founded in 1999, MercadoLibre has grown from a small online auction site into the region's undisputed e-commerce and fintech leader, transforming how millions of people shop, pay, and do business across the continent. MercadoLibre dominates e-commerce in Brazil, Argentina, Mexico, and beyond, with a presence in 18 countries. Its reach is so extensive that for many Latin Americans, MercadoLibre is synonymous with online shopping. Their platform is the go-to for hundreds of millions of users, connecting buyers and sellers in a seamless digital marketplace. And their logistics network, Mercado Envios, is a massive competitive advantage, enabling fast, reliable deliveries even in remote areas. Billions invested in warehouses, trucks, and planes mean MercadoLibre can offer shipping speeds that rival global giants. This creates a powerful flywheel. Faster shipping attracts more buyers, which brings in more sellers, fueling even more growth and reinforcing their leadership. But the real magic is Mercado Pago, their fintech arm, which is quietly revolutionizing how Latin Americans handle money. What started as a simple payment solution for online purchases has evolved into a full-fledged digital wallet, payment processor, and credit platform for millions, especially the unbanked and underbanked who previously had little access to financial services. Mercado Pago's explosive growth is making it the default way to pay, both online and offline. From street vendors to major retailers, Mercado Pago is everywhere, driving financial inclusion and digital transformation. The synergy between e-commerce and fintech is powerful. The marketplace drives adoption of Mercado Pago, and the data from both sides fuels smart lending, fraud prevention, and the creation of innovative new products tailored to local needs. MercadoLibre uses this data to offer credit to small businesses and individuals, creating another high-margin revenue stream and helping entrepreneurs grow their operations. Financially, MercadoLibre is a beast, delivering strong revenue growth, real profits, and consistently reinvesting to strengthen their competitive moat. Their ability to scale both e-commerce and fintech is unmatched in the region. E-commerce and digital payments are still underpenetrated in Latin America, giving MercadoLibre a huge runway for future expansion. As internet access and smartphone adoption rise, so are mine anor mindso, so are di jor dirty das, andor their mind their addressable market. MercadoLibre sits on a different plane, a regional e-commerce and fintech powerhouse valued at about $105 billion, with earnings per share around $41.02 and a PE near 50.51. The company delivered about $20.77 billion of revenue in 2024 and converted that scale into roughly $1.91 billion of net income, underlining how large market penetration and payments momentum can translate into meaningful profits. Yes, the stock is pricey, but you're buying the clear leader in a massive, fast-growing market with decades of growth ahead. For 2025 and beyond, MercadoLibre's dominance in e-commerce, logistics, and fintech makes it one of the best long-term growth stocks on the planet. Its ability to innovate and adapt to local challenges sets it apart from global competitors. It's a foundational holding for any growth-focused portfolio, offering exposure to the digital transformation of an entire continent and the potential for outsized returns as Latin America's digital economy takes off. Fourth on our list is ON Holding, ticker ONON, the Swiss athletic brand redefining performance and style. ON's patented cloud tech technology delivers a unique running experience, winning fans from elite athletes to everyday walkers. But it's not just about tech. Their shoes look as good as they feel, breaking into the lifestyle and fashion market. This dual appeal massively expands their market, letting them compete with both sports and premium fashion brands. Their direct-to-consumer model means higher margins and direct customer insights, while selective retail partnerships broaden their reach without diluting the brand. Global expansion is just beginning, especially in Asia-Pacific, a huge market for athletic wear. ON is also moving into apparel, bringing their performance focus to running shorts, jackets, and more, another big growth lever. Financially, ON is delivering some of the fastest revenue growth in the sector, with strong margins and real profits. Tennis legend Roger Federer is a co-founder and active partner, adding global credibility. ON Holding represents a premium-priced consumer brand with a market cap close to $14.52 billion and earnings of about 83 cents per share, trading at a PE of roughly 53. In 2024, it reported around $2.31 billion of revenue and net income of about $242.3 million. The kind of margin profile investors watch closely as the brand scales globally. The stock isn't cheap, but the premium is justified by the brand's momentum, innovative products, and global potential. For 2025, ON Holding is a brand with massive runway, differentiated products, a loyal fan base, and room to expand in both geography and categories. This is a company redefining sportswear, and it's just getting started. Our final pick is Amazon, ticker AMZN, the global e-commerce and cloud giant that's still underestimated. Amazon dominates online retail, but e-commerce is still a growing share of total retail sales. Their relentless push for faster delivery and wider selection keeps them ahead. The Buy with Prime initiative lets third-party merchants use Amazon's logistics and Prime shipping, expanding their reach beyond their own platform. Amazon's advertising business is a hidden gem, growing fast, high margin, and now a massive profit engine. But the real powerhouse is Amazon Web Services, AWS, the leader in cloud computing. AWS powers much of the internet and is at the heart of the AI revolution. The demand for cloud and AI computing is exploding, and AWS is investing heavily to stay ahead. Together, Amazon's e-commerce, advertising, and AWS businesses make it a powerhouse. Each could be a standalone giant. Financially, Amazon is shifting from heavy investment to harvesting profits, with expanding margins and surging free cash flow. Amazon remains the behemoth in the room with a market value of roughly $2.49 trillion, trailing EPS of about $7.09 and a PE near 32.89. In 2024, Amazon generated approximately $637.95 billion in revenue and converted that into about $59.24 billion of net income, a demonstration of the company's unmatched scale and diversified cash engines from retail, cloud, and advertising. CEO Andy Jassy is driving efficiency, and the company is investing in future growth areas like healthcare, satellites, and robotics, while also buying back shares. Despite its size, Amazon is still innovating like a startup. For 2025, Amazon's growth in e-commerce, digital ads, and especially AI-driven cloud services makes it a must-watch stock. It's one of the most durable and compelling growth stories in the market. There you have it, 5 growth stocks with huge potential for 2025 and beyond, from fintech disruptors like Nu and MercadoLibre to Dutch Bros' cult coffee, ON's performance innovation, and Amazon's global dominance. Each has a powerful story and a massive runway. Taken together, these snapshots highlight a wide spectrum of opportunities, from high-growth, high-multiple names still proving unit economics to mature giants turning massive revenue into substantial earnings, and each demands a different risk and reward lens from investors. Remember, do your own research, understand the risks, and pick the stories that fit your strategy. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips, deep dives, and real-time alerts, join the Stocks Galore Patreon community, details below. Now, your turn. Which of these 5 stocks are you most bullish on for 2025? Drop your pick in the comments. Don't forget to like, share, and subscribe for more top investing ideas. Thanks for watching, and I'll see you in the next one.